Welcome to daily currency update from the currency desk. On the first trading day of the week, we have seen some appreciation in the value of Indian rupee against the US dollar. Just to give you a small recap, on Friday we had a strong appreciation in the Indian rupee as well. For the first time we saw a weekly gain for USD INR of around 2.5%. This weekly gain has caused the USD INR to move up till 54.50 levels. The crucial support remains around 54.30 levels, and this has been tested once or twice, but we haven't seen any breakdown of that level. So if it breaks below 54.30, one can initiate fresh sell at those levels. We had the GDP data coming out for our country on Friday, which was slightly below expectations, but still it did not have any major impact and the trend continued to remain bullish. This was mainly seen because we have some expectations from the winter parliament session. This week we have the voting for the FDI in retail segment. So if the voting comes out in favor of the ruling party and the bill is passed, we could see more downside in the USD INR. In the morning session today, we had the Chinese PMI data, which came in better than expectations, and we are seeing continuous, slow but continuous growth in the Chinese PMI data. So this indicates that overall situation in China is improving. Based on this, we had strong rally in the equity indices in the morning session from the Asian markets, including Korea and Japan. So following this trend, we have seen the Indian equity markets also opening slightly higher, and due to which we have some support for the Indian rupee against the US dollar. Coming to the European area, we had ECB Mario Draghi statement on Friday, which gave in some bullish support for the euro. But along with this, we had the jobless rate and other consumer spending data from Germany and France coming in lower than expected. Based on this negative data, all the gains in the euro were negated. Again, we have the fiscal cliff playing a role, due to which the value of euro continues to remain higher against the US dollar. So all in all, taking all this into consideration, we recommend a sell at current levels, a fresh sell in the euro INR with a stop loss of 71.50 in the spot, which is around the recent highs. In pound, we had the UK GfK consumer confidence data, which came in better than expectations. That is, the decrease was not as much as expected. So overall, we are seeing an improvement in the sentiments of UK. So based on this, we could see some support for the pound in the coming days. We have seen the pound gain in value against the US dollar, but fall against the Indian rupee. So currently we recommend a hold in the pound against the Indian rupee, and technically it is advisable to sell below 87 levels with a target of 86.74 in the spot in the short term. In terms of Japanese yen, we had a string of positive data on Friday. This has brought in some support for the Japanese yen against the US dollar and against the Indian rupee as well. Again, we are seeing some safe haven investing going on in the Japanese yen, and this will continue till the time the fiscal cliff issue is solved. If there is no outcome of the fiscal cliff issue this week as well, then again we could see the Japanese yen rallying and covering some of the losses of the past few months. At current levels, against the Indian rupee, we recommend a hold short with a stop loss of 66.50 in the spot levels. Thank you.